Hello traders, welcome again to another weekly Forex Forecast. This is Trade Forex with Gabe, and my name is Gabriel Uchimadu. I will be walking you as always for the market opportunities for the week, and that's June the 24th through to the 28th. Last week we had three major interest rate decisions, and was a volatile week indeed. Let's start this week by looking at some of the pit holes, high impact news that is ahead of us for the week. Now we start on Monday with the Bank of Canada, Governor McClain speaking, and on Tuesday we see the CPI data month-in-month and median CPI data to affect Canadian dollar, and of course the trimmed CPI data also year-in-year to affect Canadian dollar. That poses a high volatility for the Canadian dollar. And then on Wednesday, we'll see CPI data affecting Australian dollar, and on Thursday, we'll see Bank of England Governor Bailey speak. And then on the USD, we see final GDP quarter-in-quarter, unemployment claims, and pending home sales to affect the USD. And on Friday, we'll be wrapping up with GDP month-in-month data and core PCE price index data and the revised UOM consumer sentiment data. Not so much to be worried about, but of course on Tuesday, if you have Canadian dollar in the mix, need to watch out for that. Okay, and then on Thursday, where we'll be having some GDP data quarter-in-quarter. Okay, so let's move on to the next data, the indicators we use to plan our trade, and that's the currency strength meter. Now, let's look at from for this week. We see here that Swiss franc lost some strength from a 2.9 points to a 1.2, still on the positive side though. And we see the biggest leap we had was Australian dollar moving from a negative 0.4 to a positive 0.9 score for the week. USD also moving from the negative region of negative 0.2 to a 0.4, so it's coming out as a good pair to trade for the week. And then we see also NZD still retaining some strength there, 0.3 and 0.4. Now we see Great Britain pound maintaining the strength on the negative side of 0.2 negative, and this week again is maintaining 0.2, whereas Canadian dollar also gaining some strength there from negative 2.0 to negative 0.2, and euro last week we had the negative 2.8, this week is on negative 1.9. Japanese yen still having the biggest sell-off, and this week I will be staying away from it again because we had the bank BOJ, that's the Bank of Japan, making some interventions. So I just don't want to be in those crossfires when the bank governor for BOJ will make those interventions on the pair. So the biggest positive to negative net change is the Swiss franc, NZD, USD, AUD. But I would like to focus on the pairs, weakest pairs to trade, and that's on Euro, GBP, and Canadian dollar. So these are going to be my best pairs to focus on for the week. So I'll be looking to pair them off here: Euro, Australian dollar, Euro, USD, and Euro, Swiss franc, and GBP, Australian dollar, GBP, Swiss franc, GBP, USD. And lastly, Canadian dollar, I would like to go long on AUD card, USD card, and go short on Canadian dollar, Swiss franc. So these are my 9 pairs for the week. Of course, don't forget you have to plan your trades with correlation analysis, so you don't get caught up trading same pairs having equal correlation to each other. So let's start by looking at what the charts are saying. And as always, we like to start with the dollar index. And you see, guys, just like we've been analyzing for the last weeks, we are expecting a stronger dollar if you look closely here on the daily time frame, what you see here more or less looks like a double bottom here, and we're already seeing the breakout from that neckline, and this is presenting us with an opportunity for dollar to push even further higher. So dollar strength into this week, if you have some trades looking for a dollar long, I think you will be on the good side of the markets into this week, because we've been analyzing this, and right now everything is panning out just as we predicted. So our goal is to see the dollar rally up to the 106.202 level. So with that said, now we can go into what the pairs for the week, the top best pairs for the week. And starting with euro, we'll be looking at euro AUD, euro Swiss franc, and euro USD. Okay, so let's start by looking at the first one, euro AUD. And euro AUD, we're looking to go short. Don't forget, these were also some of the pairs we traded last week. They are repeating themselves again into this week. So this was a fantastic trade from last week, guys. If you traded this, you should be smiling to the bank, where we started the week here and predicted that our first TP will be at 1.60813. Now look at how price, sold off into that level, and our second target was 1.60217. Now it fell short by just few pips. So into this week, I'm expecting price to make some retracement, of course. Don't forget to use your Fibonacci levels to predict to what level this retracement could get to. So 50, 61.8, these are going to be fantastic place to look for short, so you can get good risk to reward ratio down to the next key level of 1.6021 level. Okay, so traders, last week's target is still going to be this week's target, because these pairs presenting themselves to be the best pairs to trade for the week. Now let's look at euro Swiss franc. Euro Swiss franc, Euro Swiss franc. Just give me a moment to find it. Okay, so here's Euro Swiss franc, and this pair we anticipated price to sell off into the 0.94588 level. This was where we started the week. So we drew our Fibonacci and expected some correction into at least the 38.2, but you can see as soon as the market started off, what we saw was an immediate sell-off, but price still returned back to that level. So if we don't get further correction into 23.6 or 38.2 level, and we'll begin to sell off almost immediately, then it's still a good number of pips to bank into your account. So it's about 97.9 pips to bank into the next key level we are expecting. Okay, and last on euro pair is euro USD. Euro USD. And on Euro USD last week, this didn't really play out exactly as we had anticipated. But now I want to show you something, because sometimes we don't get to notice this thing. So anytime price gives you a massive sell-off like this, it's always important to pull out your Fibonacci retracement tool. So look at this. Before we started the week, we had a major sell-off. And if you take a measurement how the Fibonacci measures to what degree this retracement will be, notice something. It got to the 50 Fibonacci level. Now this is very key. 50 is one of the best retracement levels for you to look to re-enter your positions. So for those who did this, I don't think I brought this to your notice last week. This would have been a fantastic trade for you, because already at that point we started seeing new sell-off into our key level. So going into the week, we still expect further sell-off. Let me give you at least to what degree we're expecting the sell-off to go. About 92 pips from our current price level at this time. So that's it for euro pairs. That's it for euro pairs. Now we will be looking at Canadian dollar. So let's look at AUD card, USD card, and card Swiss franc. So let's go to AUD card. AUD card, we're looking to go long. Now, this was another fantastic trade into the week. Recall that we started the week somewhere around here, and our target was that price was going to rally up to this technical level, 0.92134. This was the ultimate technical target for this channel breakout. So right now that we started the week here, if you traded from this point, then you should be happy to your bank, because you could have banked in about 87 pips. But not to worry, we still have some more pips to go. At least we should expect price to take out the last target from last week, which is about 66 pips. And here we have about 122 pips. So AUD card, fantastic trade there. Fantastic trade. So whoever is looking forward to that trade, you can plan your trade with a nice stop loss levels. Next on the list is USD card. And on USD card, now this trade didn't go very well as planned. We expected new rallies, okay? New rallies at least to take out the last high. We should establish, the profit targets will be guaranteed. But what we saw is that price began to sell off. Although it hasn't broken all the key levels, we may begin to see new rallies again, and this will give us a good risk to reward ratio towards our targets, about 151 pips. So it's about what time, at what point do we go in. Now, I'll give you a little bit of an insight how I trade this. Usually I go down to lower time frames, okay? I go down to lower time frames and try to find the breakout from the structure that I see. So just to give you a little bit of a bonus training here. So what we see here, if price begins to break this structure, then it would be a fantastic place to look for new entry. Okay, to look for new entry into first the technical target for the breakout, and also to the technical target for the bigger breakouts we had here. So you can plan your trades with these opportunities. And last but not the least is CAD Swiss franc. So we're looking to go short on this. So let's pull out the data, the chart. So CAD Swiss franc. On CAD Swiss franc, now I'd like you to notice something here. We are generally on the downtrend, okay, on the daily time frames. And we found that despite that, we saw price making new rallies here, which means it was getting set for new sell-off. So this was one of it. It was a very fantastic trade from last week. I don't know how many of you took it, but this was textbook breakout after a massive sell-off, and price is able to go down to, and price is able to, form this kind of rectangle pattern. Then this is an amazing setup, and we traded it. The technical target was given as 0.6463. This was achieved. So right now what we're looking for is to find the next entry point, because ultimately where we're headed is for price to sell off into the 0.63983 level. Okay, that's CAD Swiss franc. Okay, so this will be last for Canadian dollar, and the last analysis chain we'll be looking at is the GBP pair. So we're looking at GBP Australian dollar, GBP Swiss franc, and GBP USD, all looking to go short on them. So starting off with GBP Swiss franc. Yes, let's start now. Let's start with I think it was GBP Swiss franc I didn't like so much. Was it GBP Swiss franc anyway? But the setup here, we're almost hitting our technical target. So this, I think the last measure I got was about 70 pips or so. And let me just recall. Okay, 129 pips, yes. So about 129 pips. But you need to know that price may make some further correction. You see that massive sell-off we had there. So we already retraced to 38.2. Is price going to retrace to 50.0 or 61.8 before the new sell-off begins into the main technical target of 1.11673? So you can plan your trade around that. GBP, Swiss franc, looking for sell opportunities into the next key level of 1.1167 trade. Next on the line is GBP AUD. And on GBP AUD, what we see here again is that the structure is trying to be complete to retest all the next key level. And that next key level is around this base. So usually to be on the safe side, we take the last support we had. So price selling off at least to take out the last low. This will give us about 123 pips. But this is our final destination at the lower boundary of this channel, which is about 237.8 pips away. Okay. And last but not the least of them all will be GBP USD. GBP USD. Okay, there you are. So GBP USD, again, you see this technical structure almost achieving its goal. It has to achieve this goal, you know. So that goal is, I think this will be the one. Okay, about 33 pips. This is where we're expecting price to sell off into. Now look at the bigger picture. We're on an uptrend. So price failed to create a new higher high between this and this. Okay. So this is already presenting us that we could be having more sell-off because the last swing high was unable to take out the last swing high. So this is presenting us with some new info that we should be preparing for more sell-off on this pair. Okay, because also recall that on the dollar index, we saw all potentials pointing to a dollar rally. If the dollar rallies, every other currency crossing it will have to sell off. All right, traders, this is where I'm going to draw the curtain. We've been able to cover 9 market segments, opportunities we saw, and we've just brought it to your notice. So now it's left for you to take the bull by the horn, do your analysis, be sure to manage your risk, and we should be fine. Okay. All right. So this is it from my trading decks. Until next week, I wish you all the best on your trading journey. Have a great week ahead. Bye-bye.